Welcome back to Candlelight, where price is a mechanical function. In this video, I'm going to be going over technical analysis for cryptocurrencies and specifically talking about trend lines. And I'm going to be using Bitcoin because Bitcoin is the S&P 500 for cryptocurrencies. You know, if Bitcoin goes up, then all of the cryptos go up, and if Bitcoin goes down, then all of the cryptos also go down. They follow it. So trend lines tell you the when to do something, and supply and demand zones tell you the where to do something. So trend lines, you can use trend lines both for your exits, hopefully for profit, and your entries, also hopefully for profit. And if that makes any kind of sense. All right, so let's get into it. All right, now this is Bitcoin, and this is, well, all these charts are Bitcoin, and this chart right here is Bitcoin on a weekly chart, which means every candle represents 1 week's worth of price action. This is a daily chart where every candlestick represents 1 day. This is a 240-minute, and this is a 60-minute. Most of the time we're going to be talking about, or we're going to be going over the weekly and daily just because we're talking about basics. So let's just say that you got in at like $10,000 on Bitcoin, and then you're really thinking, or you really want to know, hey, how can I sell as high as possible and not leave as much money on the table? You need a trend line to do that. Now, to do that, or to draw a trend line, I'm going to show you what XLU looks like. XLU is the SPDR ETF, and the SPDRs are exchange traded funds, ETFs from the New York Stock Exchange. They have XLI, XLU, XLK, XLI for industrials, and then utilities for XLU, and XLK for technology, so on and so forth. And this is just a fantastic representation on what an uptrend looks like, because it's just so textbook. So on this uptrend, this is sustainable, by the way, because you have a lot of demand zones because it's breathing and exhaling on the way up. This is sustainable. This is exactly what you want to be seeing. As soon as you have a low, a high, a higher low, and a higher swing high, you put a trend line on the two first lowest points. So on the swing low and the higher, and on the original swing low, and then on the next higher swing low. And as long as price stays on the left-hand side of your trend line, then it's following the trend. And that is true both to the upside and to the downside. So for uptrends, you want price to stay on the left-hand side of the trend. And for downtrends, you want price to stay on the left-hand side of your trend line as well. As soon as price breaks your trend line, then the trend is broken, it's over. And that's when supply starts to take precedence. And the origin of this move, or supply, exists right there. And let me paint that red. This supply and demand tells you the where things should be happening. Price should break, or supply should break, this intermediate term uptrend and then start to fall from here, or price will break above this current swing high and then come back down in this general area in a demand zone that broke this supply zone, and then continue the uptrend, and that's where you can get back in and resume the uptrend. But trend lines tell you when a trend is good, and then if it's broken, tells you, hey, the trend's over. So this is something, or that was a fantastic example of how you can, or how to draw a trend line, and this is how you do it right here. Because Bitcoin took off so quickly, your original trend line would have been the swing low and then right here, but that's a very shallow trend. I mean, you're leaving a lot of money on the table. If you would have bought in at $10,000 and then it breaks this trend line at 20, you only doubled your money when you could have cashed out at 60 or 65. So how do you do it? Well, the rally right here really took off on this move right here. On a weekly, this is where you have ballistic movement out, and then you have a second ballistic movement out again. This is where really the trend actually took off. This is the low, you have the high, and then you have a lower swing high, a higher swing low, excuse me, and then a higher swing high. As soon as price gives you the origin and the most current high, comes back down and breaks this most current swing high right here, as soon as it breaks that right at this point, that's when you can draw your trend line right here. And then as soon as as soon as price does that, then you're in an uptrend, and then you want to buy demand zones where price comes back down, it comes into demand, and then it should continue breaking higher highs and giving you, higher swing lows, higher swing highs, higher swing lows, and higher swing highs. So if you bought in at $10,000 and price is all the way up to 65, you're thinking great, awesome, but price does not go to the moon. It does not go on a rocket ship and last forever. This is a monthly chart where it's a monthly chart of Bitcoin where every candle represents 1 month. But any kind of acceleration like this ballistic acceleration does not last forever. This is unsustainable both in population, on price, an explosion, a supernova doesn't continue to grow forever. It dies eventually. And if price grows like this, it comes back down the exact same way. Both the dot-com bubble, this, for example, Facebook, whenever it IPO'd, any kind of ballistic price like this or price movement like this comes down the exact same way. So you want to sell as high as possible. How do you do that? You put a trend line on, and as soon as price breaks your trend line, then cash out for profit. If you're already in a position, then just wait for price to break it, and then if you bought at $10,000 and you cashed that out, here's 50, so let's just say 52, that's 5x. That's a fantastic profit. You don't just want paper money. I mean, if you go into a position, then you want it to actually, mean something. And for it to do so, you can't just be rich on paper forever. You need to cash out. 5x, that's not bad. That's fantastic. So that's how trend lines work on telling you when to get out for profit. Now, how do you do it on your entries? As I said, whenever price is on your left-hand side of your trend line, then it's following the trend. And if you're in an uptrend, then you want to buy low and sell high. So as soon as you have this low, high, higher swing low, and then breaks above, so it gives you a higher, it's gonna come up to go higher than this current swing high, so a higher swing high, then you want to buy demand zones. Demand zones are origins of big moves. So right here, this origin of this ballistic move, or this this leg to the upside, there's demand. And then this is a rally, base rally. You got ballistic movement out of there. That's demand right there. So in an uptrend, you want to buy as low as possible in demand. That tells you the where. And then the closer price gets to your trend line, that's kind of, your trend line is demand at an angle, so to speak. So you're in an uptrend, so you want to buy demand zones, and then you just wait for price to come back down, buy, and then sell high again. Then you're given another demand zone because it's the origin, or it's the swing low of this leg. And that's where you want to buy again, low. And it also correlates 9 times out of 10. This is fantastic. Your trend lines will tell you which demand zone needs to hold. As price is falling, you're at this point, your trend line is right here. It also needs to hold, and it also tells you, hey, it's this demand zone right here. They correlate. It's a fantastic system. So this demand zone needed to hold. As soon as this trend line, broke and this demand zone broke, that's even more of a signal for you to get out of your, let's just say that you were already in your position for 10,000. That's the demand zone needed to hold, and that was a trend line telling you, hey, this is the demand zone that needs to work. And if it doesn't, then the trend's over, and now you need to focus on shorting. So that's how you use your overall trend line to tell you where you should be focusing on getting in. What you do now in areas like this, your daily demand zone where you want to buy low here, you go to a smaller time frame. This demand zone here on a daily is this demand zone here on a 240. You see this rally, base rally, price base because it was balanced, or supply and demand was balanced. There was an equilibrium. And then you have ballistic movement out. There's an imbalance of, in this case, demand, because it went up. That's where demand exists. Where price comes back down, it rallies out. That's confirmation that demand is there. What you want to do, and this is how this is how trend lines tell you when to get in. You draw your trend line to come back down into demand. right? Price is in a short-term downtrend because it's making, you have your high, your low, your lower swing high, and your lower swing low. You're in a downtrend. You don't want to buy that. As soon as this trend line gets broken right here, then that's when you know, hey, it reversed in a overall daily demand zone. And what was a demand zone that broke this medium term downtrend? This one right here, the origin of this whole swing. When price re-enters that, that's when you want to buy low, and you should expect price to break the swing high because you are in an overall uptrend. If you bought here and put your stop loss one tick below, you're risking this much. If you sold high, you would have made on this, let's just be conservative and say 8 to 1. So if you risked 1% of your portfolio, you would have made 8% in, let's just say, 7 business days. That's not too bad. And that's how trend lines help you get into a position and out of a position. On the next video, I'm going to tell you what's going on right now, currently, because price is going down, and what you should be looking for, in this case, to the downside, because Bitcoin's coming down. It's in a downtrend. See you on the next one, guys.